Hi guys, welcome back to the channel. For those of you that don't know me, my name is Rebecca, and on this channel we go through all things finance related. So today we're going to have a look at the Introduction to Bookkeeping exam, and we're going to go through a walkthrough of some questions that I have created from scratch. So this is essentially mock exam questions, highly requested on the channel. So let's just get into it. So here on the screen, we've been told, using the following table, show how the entries should be made in the accounts in the purchase ledger accounts, and use 0 in unused cells. So that's really important, because in the exam, if you don't put zeros in unused cells, then you're going to be marked down. So we don't want that. But read the question carefully. So RTFQ. So read the question twice, answer once. Best advice I can give you. So here we've got an extract, but no, just look at that. That's not saying we've got an extract from the purchase daybook. It's saying the purchase return daybook. So what does that mean? It means it's the returns, as in these are not amounts that we owe to suppliers necessarily. Those are amounts owed to us. So purchase returns is returned goods to suppliers where they owe us that money back. So we've got that on credit. So if we look at a normal supplier amount on credit, what we're going to have is a debit to purchases in the income statement, as in a positive, and we're going to have a credit on the creditors control account or the purchase ledger control account as an amount that we owe to someone. So it shows the liability on our balance sheet. Okay, so that's a credit is a negative figure essentially. Now if we've got a purchase return, then it means that the money is owed to us. So it's not a liability, it's actually an asset, but it does sit with the rest of the trade creditors. So if we have a look at this in detail, if none of that made any sense to you, don't worry, we're going to focus in on this. So here we've got these amounts, and we've got 5,100, 3,907 and 240 here, all of which are purchase returns amounts. So again, if we put this down, what would happen normally is we'd have a debit, which would be a positive in the income statement, and a negative on the balance sheet. Okay, and this would probably go to the purchases nominal, and this would go to the trade creditors or creditors control or purchase ledger control. We like to have about 1,000 different ways of saying this. But that is because of different accounting standards like UK GAAP and IFRS, etc., which we'll go through a lot later on in your exam studies. So that would be how we would normally record a purchase on credit, as in where we haven't paid the supplier immediately. So if we had, it would be debit income statement to the purchase nominal and credit to the bank. But because it's on credit, it goes to credit trade creditors. Okay. However, with a purchase return daybook, we've got to flip this on its head, and it would be a credit to the purchase returns nominal and a debit to the balance sheet. Now here, what we need to make sure firstly is that all of our suppliers are in the right order, because it's just so easy to get that wrong in the exam and then lose marks. So we've got Green Tech, Nova, Brightpath, and Echo Print. Okay, so make sure you look at that, because you can lose marks in the exam. Now, as I said before, normally where we've got just a purchase on credit, we would have a credit on this side here in the purchase ledger control account. But these are all purchase returns amounts. As you can see here, purchase return daybook. So the ones in blue we're actually going to have as a debit. So they're following this here. So as in, we've had goods from a supplier, and they've been faulty or they've been damaged, or we've ordered twice by accident. For example, there could be numerous different reasons why we've got a return to that supplier. So we sent the goods off and we now need our money back. So that's why this is a debit as opposed to a credit in the creditors ledger account. So I'm trying to say this a number of different ways to try and help you understand why it's this way around and not the other way around. Now this one here is actually a credit, as in we owe the supplier this time. So it's hit the purchase return daybook, probably by accident. Should have been in the purchase daybook instead, but because it's a negative in the purchase return day book, and we're talking about double negatives here almost, it's going to follow this here. So it's going to be a debit to the income statement under purchases or purchases returns, and then a credit to the balance sheet under trade creditors or creditors control account, purchase ledger control account. So that's all the same nominal essentially. So that's going to go here as a credit. So that's question one. If you've got any questions about this one, make sure to put those in the comment section, and I'll always do my best to help you and put you in the right direction. But let's move on to question two. Okay, question number two. So select the correct answer here. The totals of the columns in a purchases day book have been correctly calculated as follows. Total 7,800, VAT 1,300, and net 6,500. The business uses one account for purchases and maintains control accounts for the receivables ledger and payables ledger. Which one of the following statements shows the correct posting in the general ledger? Okay, so let's just break this down. So again, the receivables ledger is also known as the debtors control account. So that's on the balance sheet, and that's where we're looking at all amounts due from customers. And then the payables ledger is also known as the creditors control account, and that's going to show us all of the amounts that we owe out to suppliers. So our receivables ledger is an asset and our payables ledger is a liability. So which one of these statements are going to be correct? Let's dive in. So firstly, we've got debit payables ledger, 7,800, credit VAT, credit purchases, 6,500. Okay, so as we said before, this here is a purchase day book. So this is showing amounts that we owe out to suppliers. So straight away, we can ignore debit receivables. So anything to do with receivables, let's ignore it. Have we got another one? No, so just that one. That's gone. Okay, now we're not dealing with purchase returns here. In the question, again, look at this in detail. It doesn't mention anything to do with returns. So if we're just scrolling through these just at an eye's glance, we can get rid of the bottom one because we don't need to look at credit and purchase returns. We're not posting to there. It's not applicable. So it therefore has to be either this one or this one. So I'd be curious as to what you think it should be, and I'm going to give you a second just to think about it before I give you the answer. All of 5 seconds I'm going to give you. I think that's 5 seconds. So let's have a look. So debit payables ledger control account, okay, or debit purchases. So think about this logically. Again, our payables ledger, is going to be on the balance sheet as a liability. So if it's a liability, it's going to show as a credit. So we're not going to post a debit to there because we owe the supplier essentially. So it's going to be this one just by that fact alone, but let's look into it in more detail. So let's just green that and let's get a darker green so you can see it. Okay, now the reason why it's not this one, even if you were just looking, or if you weren't to look at that and look at something else, is because when we're looking at purchases and we look at the income statement, so where you're working out your profit and your loss, in your income statement, your sales are shown as a credit. So they're shown as a minus figure. And all of your purchases are shown as a positive figure, so as a debit. So when you get down to the bottom, if you're left with a negative, then that actually shows a profit in the year. Whereas if you're left with a positive figure at the end, it's showing a loss in the income statement. So here, if we're posting a purchase, then it's got to go as a debit into the income statement. So we've got to find where would we post this. So first of all, the net amount is going to the income statement. So we want to debit purchases with 6,500. And so we're not going to credit purchases, we're going to debit purchases. And in terms of the VAT, we can actually claim that back from HMRC. So that's why it's a debit to the VAT control account, because it's, to us, it's an asset. So we are going to claim that money back from HMRC. So we're going to have debit purchases with the net amount, 6,500. We're going to debit the VAT control account with the 1,300. And we're going to credit the payables ledger control account with the 7,800, because that's the total amount that we owe to that supplier. So that's why, again, the gross value, so the total after we add net and VAT together, that's why that goes to the creditors control account or the payables ledger control account. So I hope that helps. But again, if you've got questions about this particular question, put those in the comment section below. And as always, I will help you. Now, one thing to mention about these mocks, they are going to be available again online through Rebecca Spanish tutorials on Podia. So I'll leave a link to that in the description for you after this. But let's move on to question 3 now. So here we've got our question. So insert amounts to complete the purchases daybook shown below. So the following table represents a partly completed purchase daybook. So this is the type of question that you're most likely to see in the exam. Complete the daybook by inserting the appropriate amounts into each column, including totals. So again, make sure that you do the totals because that's easy marks lost if you don't do it. Use zeros where appropriate, so we don't want any blank cells. Again, read the question. The VAT rate is 20% on all items and there's no prompt payment discount. So you could have a question, and we're probably going to do that in a second, or in another video where we've got prompt payment discounts, just to show you what that looks like. So here we've got some purchases here and here, and these are going to be net amounts. So we've got £1,200 here for Skyline components, and what we need to do is fill in these missing details here. So I'm actually going to colour that differently. So we want to be filling this in here. Okay, now in the exam, those will have zeros in them. So now we want to put in our net amount. So we're going to have £1,200 here. And the VAT on that is going to be 1,200 times 0.2, 240. And if you just add those two together, you get the 1,440 there. So we know that's correct. Next, here we've only got the £350 that's been input. So what we want is the 1,750 here. And the total is going to be that plus that, or we can go 1,750 times by 1.2. And we can just double check that those add up. Yeah, it's 2,100. So we've put that and that in there. And then here, we've got 1,300 already input. So we want 1,300 times by 0.2 to give us 260. And then we're going to add that and that together. Or again, we can go 1,300 times by 1.2. And these calculations only work because we're dealing with 20%. You might, in the exam, get given a question around VAT being 5% at reduced rate, for example. So be careful and again, read the question. So something we haven't done yet that we need to do, which is to add these totals in here. So I am going to cheat and use a sum for this, but you need to add them up yourself. So we've got 5,100 for the gross total. The VAT is £850, so all these three added together, and the net is 4,250. But in the exam, I advise that you take the gross minus the VAT and make sure that comes back to the net. So that you've just done a quick calculation in there to make sure that you're happy. And again, we want to sum up the total of these two purchases columns as well. So we've got 2,500 and 1,750. So once again, make sure that you read the question and you make sure if it says you need to insert the appropriate amounts into each column, then make sure that you do that. So again, just to make sure that it's in line with the exam, I'm going to change these amounts to zeros. So that's what you would expect to see. So that is the end of question number 3 there. So let's move on to question number 4. So here we've been asked to select the correct answers. So the following statements relate to supplier invoices in a manual accounting system. Select all the statements that are true. So firstly, supplier invoices are recorded in the purchases daybook. Supplier invoices are posted directly to the cash book. Supplier invoices help track amounts owed to suppliers, and supplier invoices are used to update the sales ledger. Now again, just be careful with this because you need to make sure that you're selecting every statement that is true. So there might only be one, or there might be more than one. So let's look into it. So supplier invoices are recorded in the purchases daybook. 100% supplier invoices are in fact recorded to the purchases daybook. That's one of the books of prime entry. Supplier invoices are posted directly to the cash book. That's not necessarily true because, as we know, we could buy goods on credit and we can also pay for them directly. We can pay for them in cash, we can pay for them through the bank. So supplier invoices are not always posted directly to the cash book because the cash book records actual payments, not invoices. C, supplier invoices help track amounts owed to suppliers. Very true, I think that's a given. And supplier invoices used to update the sales ledger. So that's not true. So obviously it would be our customer invoices that would be used to update the sales ledger. So the answers here are A and C. So let's move on to question 5. So here, again, we're just selecting the correct answer. So the company operates a manual coding system. Supplier codes are made up of an alphanumerical code, which includes the first 3 letters of the supplier and 3 digits in number sequences. So again, make sure that in the exam you read that properly. And I'll just say, if you can hear noises in the background, it's because the little one is just making noises. So try and ignore that. I can't edit it all out, I'm afraid. And here we've got an extract of supply names and codes that have been provided. So this is the way that it's been followed at the moment. So again, you'll get alpha numerical. So it's 3 letters of the alphabet followed by 3 numbers. But as you can see here, we've got Fusion Tech Industries, which is FUS002, and Fusion Trials, FUS003. So we've got a new supplier, which is Fusilion Limited. We need to select the most appropriate code. So here we've got 4 to choose from. So we can completely ignore TRI001 and TRI002 because we're not using the last part of the supplier's name, we're using the first part, so the first 3 letters in this case. So it's not TRI001 or TRI002, but it could be FUS001 and FUS004. However, think about this logically. If we're using a system, then it's going to follow sequentially. So if we've already got FUS002, we're likely to also have FUS001. So the next one available is going to be FUS004. So I hope that makes sense. But again, make sure to read the question in the exam because it might not always be alphanumerical. But I'm going to end this video here, and if you want to see the next 5 questions, I'll put those into another video for you. But hope that helps. Again, as always, ask questions in the comment section below and I'll do my best to help you. And otherwise, I'll catch you at the next one.